Have you been wondering if you qualify for a USDA loan, and what is a USDA loan? USDA loans cater to people with lower credit scores and accommodate lower income levels with options of having no down payment. In this video, we will dive deep into the specifics of USDA loans, covering everything you need to know to buy a home with zero down payment if you use the USDA loan. What is a USDA loan? A USDA loan is a mortgage or grant from the United States Department of Agriculture Rural Department Office that helps lower income people buy or repair homes in rural areas. USDA loans are designed for people who may not qualify for traditional mortgages due to low credit scores or income. They often have lower interest rates than conventional mortgages because the government assumes some of the lending risks. A USDA loan is specifically designed for rural property buyers. This means your property must be in a rural area to qualify. Many people don't realize that more than 90% of the U.S. is eligible for USDA loans based on the location of the home. Click on the link below to see if the home you are looking to purchase qualifies. Other than the home qualifying based on the location, you must meet other criteria, which we will discuss today. These include credit limits, debt-to-income ratio limits, income limits, and this must be a home that you plan to live in. Overlays are added rules or regulation that each lending company has put on top of the USDA regulations. If you want to know everything about buying a home on the real estate side and lending side of things, I hope that you will subscribe to this channel and give this video a thumbs up and maybe even comment below, because comments and likes below help this video get pushed out to others like you. I try to make easy to understand videos to help you get closer to your real estate goals. The key benefit to a USDA loan is that you have the ability to purchase a home in the approved areas without any down payment. There are income restrictions. Your household income must be below a certain threshold, which varies based on the number of people in the household and your location. Use the provided link in the description to check the income limits in your area. Remember, the USDA considers the total household income, so all working members' earnings are combined. The property you buy with the USDA loan must be your primary residence, not an investment or second home. While you can convert it into a rental property in the future, initially it must be your main home. USDA loans are flexible regarding credit scores, accepting scores as low as 640. However, keep in mind that some lenders might have stricter requirements and prefer higher scores. Even if you meet the minimal scores, qualifying can be challenging without additional strengths like savings or low debt-to-income ratio. Your credit score significantly impacts your loan terms and interest rates, which affect your monthly payment. Higher credit scores generally lead to better loan terms. If you barely meet the credit requirements, consider improving your credit score first to secure better loan conditions. One crucial requirement for USDA loans is maintaining a debt-to-income or DTI ratio within their limits and the overlay set by your lender. Debt-to-income ratios are essentially a way for lenders to gauge how much you can afford to borrow. They calculate this by dividing your monthly debt payments by your gross monthly income, which is your income before taxes, and the debt is what is showing on your credit score. DTI consists of two parts, the front end and the back end ratio. The standard debt to income ratio for USDA home loans are 29% on the front end and 41% of the gross monthly income on the back end. The maximum DTI on a USDA loan is 34% to 46% of the gross monthly income, or 34% on the front end, 46% on the back end. You might be saying, I don't even know how to calculate debt to income ratio or what it is. I'm going to link a video at the end of this video that will tell you how to calculate it and dive deeper into debt to income ratio. Now, please remember, while you can calculate this by yourself, I strongly suggest working with a mortgage professional to help you go over these numbers for you. What we're going over today is for informational purposes and is to help you understand the process, but to really understand if you can qualify for a USDA loan, you really need to be talking to a mortgage professional. When lenders calculate how much you can borrow, they do not consider your personal spending habits like your dining out, grocery expenses, childcare. This is why creating a personal budget is crucial. Before you even talk to a mortgage professional, it's smart for you to know how much you can afford in your budget for your housing costs. And remember, in those housing costs, you might be including utilities, HOAs, all those things. So just make sure that you have allotted enough space for the housing costs of this new mortgage that you're going to have. It's important to have that budget so you know how much you can afford each month, because sometimes lenders may say you can afford a higher amount than you actually can fit in the budget because of these other things you're spending that are not on your credit report. And like I said, this video provides a general idea. If you are serious about buying a home, start the pre-approval process with a mortgage professional. I do have a link below if you're looking for a mortgage professional or lender, and me or someone on my team would love to help you out. So check that out in the link below. I would say that one of the biggest hurdles is overcoming this debt to income ratio when qualifying for a USDA loan. If you can overcome this hurdle, find a qualifiable rural property, meet the income requirements, and have a credit score of 640 or higher, the chances of securing a USDA loan are much higher. But remember, if you want to get a pre-approval, you are going to need to give your lender your W-2s, tax returns, your bank statements, along with a credit check. It is also important to remember that you can check out the other loan options when you're talking to your lender and ask about the FHA, conventional, or any other loan options that you might qualify for, and then you can decide what is the best option for you. USDA loans not only offer no down payment, they also have no maximum loan limits, unlike FHA and conventional loans. This is really neat. Additionally, if your home appraises for more than the purchase price, USDA allows you to use the excess value towards closing costs. For example, if you buy a home for $400,000 and it appraises for $410,000, you can use the extra $10,000 to use towards closing costs. This can make it possible to buy a home with no down payment and no closing costs. Because you have to remember, even with no down payment, you need to expect some closing costs. But having additional savings is very wise. When you're buying a home, it's really important to have that cushion in the bank in case you have a job loss or you need repairs on the home. First-time home buyers should plan for a long-term commitment, especially when they're doing a USDA loan with no money down. This is because home prices can fluctuate, and if you need to sell soon, you might owe more than the home is worth. The longer you are in a home, this can help mitigate this risk. So please consider these aspects when buying a home with little to no money down. One thing I want to touch on is USDA loans has an upfront mortgage insurance premium, and this is 1% of the loan amount. While you can choose to pay this out of pocket, most people choose to finance it. So for example, if you are purchasing a $500,000 loan, your loan amount would be $505,000 once you add that 1%. So you can see it is more crucial to have a longer term perspective when using a USDA loan, because there is no initial equity and the upfront fee increases your loan balance. One of the advantages of a USDA loan, though, is their low mortgage monthly insurance rate of 0.35% or 0.0035, which is the lowest compared to other loans required mortgage insurance. This rate is added to your monthly mortgage payment. To calculate this, you take your loan amount, including the finance fee, and multiply it by 0.0035. For a $400,000 home, adding the 1% finance fee, so $404,000, you would times that by 0.35% or 0.0035, and that would equal $1,414. Now divide that by 12, and that would mean you would have a monthly mortgage insurance of $117.83 per month. Now you need to remember that mortgage insurance is not for your benefit. This is for the lender's benefit. It protects the lender if you default on the loan, and that's because it's a higher risk because there is no down payment. This insurance is required for all loans that don't have a 20% down payment, except for the VA loans, which are for veterans. Finally, let's discuss employment and income requirements. Beyond meeting income limits, you need steady employment for the past 2 years. Job changes are allowed, but consistency is key. Switching from a W-2 to a 1099 form of income without a 2-year history in the same field can be problematic. The best approach is to consult a lender who will review your credits and document to conform eligibility and provide guidance if you need to improve certain aspects. Guys, I cannot emphasize this enough. The sooner you talk to a lender or a mortgage professional, the better you are going to be when you are going to purchase a home, because they can mitigate the different things you need to do sooner than later. If you do not have a trusted lender, check the link below, and I would love to connect with you or someone on my team. If you are new to the home buying process, consider my first time home buying course. It covers everything from securing a loan to closing on a home, and this is absolutely free. If after watching this you think USDA loans might not be for you due to the requirements, check out the other videos I have on the different loan options. And to calculate your debt to income ratio, click this link here. If this seems overwhelming, please click on the referral link below, and I'd love to connect with you and help you on this journey. And I hope to hear from you soon.